Mercedes a good team.
All right, ladies and gentlemen, welcome back. Chart Talk 72. Who thought we'd make it here? Not me. All right, let's get right into the market outlook. I need some white lines right here. All right, so last week, well, let me get my trend lines straight. All right, so last week we had a pretty vicious pull in stocks. We've been in this uptrend in the S&P. We stalled out last Tuesday at highs. Then we saw that Wednesday follow through on the sell-off. Little bounce Thursday, and then we continued to sell off Friday. So we ended the week looking pretty grim. We were thinking we were going to pull back more coming into the week, but Monday morning happened. We gapped up, we pivoted, and we stayed within the trend. So we are still in this trend. Trend looks very good. That was like the best news we could have seen this week, Monday. And same thing with the Nasdaq. Same thing, leading the way once again on these Google and Amazon earnings. So we had a little scare last week, but the market held up where it needed to. So, continue with the trend as we see it. Ben, you want to jump into?
All right, next is Beam, BEAM, through 100.
Beam, this shit went today. Oh, it came back. All right, nothing to miss. So this Beam, we were looking at this through this 101 area. Obviously, it broke today and came right back. It needs to close over that 101 area to be deemed successful. It doesn't look great, though, right now.
All right, next we have this MSGM, recent IPO, up through 31.
Oh, NSGM, yeah. This is M? Oh, MSGM, Motorsports Games. Yeah. So we're loving these. We're loving these recent IPOs that come up off support. My good trade later is Affirm. It's a pretty similar trade, but I love this one through this 35th, just through 31 area. It looks good.
All right, next we got Ricky. He's looking at DHI through 78. It's already had earnings.
Yeah, we love this. We're just a huge macro level. Got a little bit ahead of itself on earnings, sold off, put in a really nice pivot. Now it's flagging really tight on the daily right before it takes on a weekly level. We like when things match up like that.
All right, next we got Tom. He's looking at Ride up through that 26 quarter.
I bought this Ride today. I'm full sized in it. I love this thing. And the reason I love it is because it's an electric vehicle name. It's got this pattern, and then we just saw its brother, Workhorse, just rip through this pattern. So we're looking for Ride to do the same thing. I bought some today against this 24 area. Looks really good so far.
All right. So we're done with some of the member ideas. We have a couple questions. One of the members was asking, what separates your top ideas, such as T-Doc, from just a regular swing setup?
It goes right back into that Ride and that Workhorse I was just talking about. Electric vehicle names, obviously a very hot sector. So Teladoc is telemedicine. Obviously, in the past year, everything had to close down, so telemedicine is getting a huge boost. So just that information alone makes this name so much more important to other names to me. And then when you factor in the weekly and macro setup, we saw this thing advance like crazy in 2020. Then it did nothing for 4 months, and it just had all these positive catalysts on the way. So my thinking was if it could break through this resistance level, it should have been off to the races, and that's exactly what we saw. So it's really about sectors and macro chart patterns and keeping eyes on catalysts and things like that.
All right, so we have two more questions, and then we're going to jump into some of the social media ones. First one, when a stock is extended into a buy point, let's say 5% higher than entry, do you still enter the trade?
I like to not chase and wait on my price points. In my past, whenever I've chased, it's usually burned me. The other thing is that 5% in a $300 name is a lot different than 5% in a really high beta $30 name, for example. So I think it depends on the name recognition. It depends how much you're chasing it on a chart. There's a little bit of an eye test there. But overall, I want to wait for my price points.
All right. So the main topic, we've probably gotten 1,000 DMs in the last 36 hours. Maybe not 1,000. We've gotten a lot about GameStop. So maybe Sheikh, you can let the people watching know some of the inside stuff that the average person's not going to know about related to this whole saga.
Yeah, I mean, there's just a lot of things that people weren't realizing with this trade. I mean, the goal was to stick it to the man, and Citadel was at the center of this, right? Citadel, Melvin Capital. Citadel makes half their money selling options by making markets. They're market making, so they're the guys who you buy options from, sell them from. They've done 30% of all GameStop retail trades in the past week. So they're killing it. They're killing it on that side. So I think people have to have a better understanding of the game and the internals before it's just like, oh, we're sticking it to the man, blah, blah, blah. And overall, and the other thing we were talking about this yesterday. We're refilling this chart talk because disaster yesterday. But we were talking about how, all right, the guy, what's his name? Gabriel Plotkin. He's the guy, he's the CEO and founder of this Melvin Capital, who's the one who got short squeezed and all these things. He was at the center of this. That guy defected from Stevie Cohen's .72 asset management. He was one of their best traders. He left to start his own fund. Well, the first investor in his new fund was Stevie Cohen. All right. You think, Stevie Cohen is who Billions is based on. Do you think that guy is not going to try to stick it to that guy? Now he owns some of his fund. So what you got to factor in is, do you think some of these guys who are the best traders, the most sophisticated investors in the world, do you think they're not taking advantage of the move too? You think Stevie Cohen and those guys aren't day trading this shit to kill the other hedge funds? He's on the same side probably most of the fucking Wall Street Bets crew was on this trade. For all we know. We don't know that, I'm saying. But I'm saying, like, these guys are the most sophisticated traders in the world. These guys are the best of the best. These guys are the Michael Jordans of the game. So, like, I just think people are just too hopeful about, taking down the man and all these other things. Because just try to fucking focus on making money when you're trading. Bringing all these outside factors in is just like, it's just nonsensical. And you at the end of the day, trading. You said this yesterday. It was a great line in the chart talk we recorded. Trading is you versus you. It's not you versus the man. It's not you versus the market. It's you versus you. So I think just people have to have a better hold on that overall.
And that was we kind of talked about this in the big picture, where this was almost like the Trojan horse, where for those 2 days that everyone thought they were sticking it to the man or to the hedge funds or to Wall Street, when they were told they could only sell, which is like what we were telling anyone who owned it that was up 500,000%. It's like, you have to sell to make money. Like, that's the only way you're going to stick it to the person, is by realizing a profit. But when Robinhood comes out and says you can only sell, it was like telling a kid he can't play with a toy. So everyone's like closed up. No, I don't want to sell. Screw that. Where it's like, that's... So it's like and now we're getting these DMs of people, I bought it at 400. I put my life savings in at 300 and I'm down 90%. Now I want to be bailed out, but the hedge funds can't get bailed out. So it's like ironic now when that person's now in trouble, they want to get bailed out for their own foolish decisions, where when the hedge fund makes a mistake, and we're not backing them, but it just, you bought GameStop and you're losing money, that's your own fault. And we tried to tell people to sell those last couple of days, and we got a lot of crap for it, where people like, we're holding to 1,000, and it's like, now you're down 80% in 2 days, and you're more worse off from it. And now all those people, you're not going to leave Robinhood. You're going to say or complain about it on social media, which is free marketing for Robinhood. They'll get more users as a result.
I mean, the guys who put on the trade, that was a fucking genius move. That was a once-in-a-lifetime move. They fucking, started buying 2021, and it went all the way to 483 in 2 weeks. Those guys killed it. But, I mean, the majority of the people, if you go on Wall Street Bets and sort by new, it's a fucking graveyard. It's like I don't want to make fun of it anymore because it's just sad. Like, people losing their fucking houses, people losing their life savings because they bought fucking GME above 300 thinking it's going to 1,000. It's just like,
For Good Trade Badger, we got Tyler Kinney in this XP, that first white chart.
What he did well, he didn't move his stop too quickly. Like, I see a lot of people moving their stop up very quickly and getting shaken out of this trade. He did a great job not doing so. So, good job on that.
Yeah, and if you pull it up today, it's up another 5%, from that chart was from yesterday. Right. So it's like, he's still in it, and it's working. It's exactly what he needs to do. His stop is defined. Maybe he ups the stop for some versus low a day, but holding a winner. Next, we got Tom Ramsey. First one is this Wolf was his bad trade.
Wolf, I got this one. So, all right, this Wolf. So this is like we were talking about the 5%. 5% T-Doc is not the same as 5% Wolf, let's say. Wolf moves up and down 20% a day. It's $30 name, very high beta, things like that. So he bought 26.65. He risked 75 cents, and he took a loss. He was up. He bought 26.65. He was up. It went up to 28.40 that day. So he was up almost $2 on his 75-cent risk. He lost 2%. Maybe he could have taken some off in that first move. It depends on your style of trading, really. But this isn't a bad loss at all. This is a very tight risk loss. You could tell his upside was much greater than his downside because he was up more on the day than he ended up losing in the trade. So maybe could kick some there. But overall, good loss.
Yeah. All right, next we have this CGC, one of his better trades. So again, very tight risk setup. I bought up through 26 through support, tight risk entry, first kick, sold a quarter for 36% gain. Phenomenal trade. Lose 2% in a great loser, and then lock it in 36% and still holding that winner. All around, very good trading. Next, we got Andrew Trung, who just shipped our new TE shirts.
Chung Moolah, baby. What up? How them t-shirts looking? All right, so I see what he tried to do here. He was buying this earnings through an earnings resistance level. Again, the only reason these are okay is that there's no bigger catalyst for a stock than earnings. It comes once every 3 months, and it causes a drastic shift in the stock's composure. So he was buying that breakout. Again, looks like he bought 578 versus the low. I think that was his first mistake, was he was a little late on that entry. You want to really buy this 570, 572, 574 area. And another thing with day one IPOs, I was just talking about this with someone. I mean, day one earnings. If you're buying an earning on day one, the propensity of them to come back and give up that move is much higher than an earnings base. So if I buy something day one on earnings, I'm going to take some off into that move up. Now, he didn't have a good enough price to do that. If he bought it, 565 versus these lows, he could have gotten a kickoff, and he would have probably broke even on the trade or so. But other than that, just like keep in mind these day one earnings often come back. They can go for 20% that same day, or they can go up 10% and come right back. So that's kind of what he experienced there.
Yeah. And then next up was his good trade, was his workhorse.
Fuck yeah. So I mean, this is why I bought Ride. This trade exactly. They got a catalyst here, and these are like very similar trades. So he bought this at the right price point. He was buying it by an opening range breakout, had an impossibly tight stop, so that these trades that have to either go right now or they fail. That's the only thing you can do, because you can't buy 28 and give it down to $20 right the support level. It's a breakout trade. It's got to go right now. And you see he bought 27.45 and he had a stop of whatever that is, like 50 cents lower, and he's kicking at 31.50, 32. So his risk reward is really on the right page here, and he's still got some stock. So this is overall a great trade. I got no qualms with this one. This is nice.
So with that, Jake, if you want to jump into any of your good or bad trades, then I'll go over a couple of mine.
Sure. I'll start with this. I messed up this AMD so bad. All right, this AMD. So I like this previous resistance level turning to support. It's got the 100-day simple moving average right here supporting it. One of the strongest names. They had great earnings. It didn't react very positively, but I did like those earnings. So I was looking at this pivot day, and let's go to let me show my executions. And I just didn't give this thing the right amount of room. I was trying to be so tight with it. I should have given it to at least this half. I just gave it to the low of the day by a penny, and I was pretty much the low of the day. And then look what happens. It makes the move. And I have a tough time buying this back mentally, because my price here, I still have a tiny piece. You can see I'm long from 85 here. But my price here was like 85.40, and I was giving it to 84.69. I was risking less than $1. So I was trying to, just be too tight with it so I could get as much stock as possible. And, and you look where I was stopped out, and, the stock looks great from there. So just keeping it way too tight there. I definitely should have kept that one looser. And then my good trade is this. We'll say this a firm. So let me talk about this one. I treated this as two different trades almost. Shouts out to Carly B. He called this out. And that's why we like this. What was it? MSGM? MSGM. You see the very similar chart pattern. So once it turns, we should expect a pretty beastly turn. So, all right. So Carl called this out. He called this 103 out right here. And I was buying this, about 1,000 shares, 103 versus this 99.50. So I'm risking $3,500, $3.50 on that. So that, 5-to-1 on that is like, what, $17.50? So I got to be looking to kick that stock around 120 if I want 5-to-1, correct? So, but this new stock, so it came up, broke through, and then it held 102.50. And I knew this 103 area that I bought through was the sort of resistance level I wanted to see hold. So once I was able to see that hold, I bought another 1,000 here. And I bought, let's say, 103.25, 104, and I only gave it to this 102.50. So, again, the probability is very decreased on that, but I saw the area hold, so I can do a little day trading on that area. So this becomes a whole different trade where I have stock 103.50, we'll say, with $1 risk. So then the next day when we get that pop, I can kick all that stock for a great risk reward. Again, I'm risking $1 from 103.50, and I'm kicking 110, 111, 111 all the way up to 115. And then I get a kick of this core stock off at this above this 118, which is like 4-to-1 or so. And the trade is ongoing. So what really helped me out, though, P&L wise, was being able to buy this this pivot stock right here. And it's not always going to work out, but when it does, the risk reward is insane. And that's one of my biggest edges there, is kind of putting on that risk intraday. So those are the two I'll go with. Shouts out to Carly B. Called this one out. Tom was talking about this ride. I just bought this one today. I really like it. But that's it. What you got?
No, so there was like a couple mistakes in this. It was a good trade. I made money in it, but there was some initial mistakes. So first initial buy was great. The first mistake was, again, thing went 14 points in 3 days. I didn't take any off that first day. So I wanted to add to the position. So as it pulled back in, I did very well waiting for that pivot, waiting for it to come back.
Not kicking any is nuts.
No. So I can't tell everyone to be patient and then just kick, so I have to kind of hold it. So again, that was the first initial mistake, was not kicking some in that nearly vertical move. But what I did well after that was, as it pulled back in, and this would normally be a point that, we'd be getting stopped out, or I'd be getting stopped out. I waited for the pivot and then bought back on the way up. So it held versus that like 102 area. I bought up through 104. And like you said, Shake, when you get that cheaper stock, you can, have a different trade there. So I had my 98 stock from the same stop versus 100. And then this that I bought up through 104, that stop versus 102. So I was risking $2 there. The mistake, though, was I added too aggressively on that last buy. So now as it's rebounding and I've had two good buys, I prematurely bought that third time, which is now affecting kind of my cost. So that's where I, upped that stop, versus a low a day kind of arbitrarily, and got stopped out. So that was kind of, there were some good parts about the trade, some bad parts. Again, earnings are in a couple of days. I'm not going to hold the same into earnings regardless. So I kind of had to get out of it, and I just kind of took the trade there. But that was just kind of me trying to try some new things, still made money, and will next time kick some after a 14-point move in 3 days. All right, Jake, what do we got for top idea?
I think this ride is still viable. I like this one a lot. They don't have earnings for a bit. We were talking about the workhorse trade, but I mean, we saw how this week went, and it's kind of tough. We were talking about it yesterday how it was like we had a huge 3 days. Space was an alert. Let's see. I mean, we see this FLGT. All right. Corsair was an alert today. That's gone. API, fucking gone. IMNM, gone. The CMPS, fuck, that went. But so we've seen so much go with this market turnaround that, I'm not dying to put on risk on this given day, after this move. If we go sideways a little bit or whatever it may be, then maybe I'll put on some more risk. But right now I want to focus on stocks that, like this ride, that don't have too much market correlation. What you looking at?
The main idea for today was CRM, but it already started to trigger. The other one on my radar is this BABA. But this will take some time, because right now the next buy really is up through 270, and I don't really 210 versus 270. So if it kind of pull more into the middle of this range and find another setup, that'll be my next focus. All right, so last things we got, book of the week.
All right. I've been reading this Unknown Market Wizards. It's the newest hedge fund market wizards book. It's always cool when he does these books, and this is the first one he's ever done with just plain retail traders. So it's been a good read. It's always interesting to see when guys have completely opposite strategies of you, but they're able to be so consistent and make so much money. And then there's guys with very similar strategies to us. So it's just cool seeing different dynamics in the market and seeing how traders are able to consistently make money. And these guys all made big money, like 20 million plus and shit. So it's a good read and very relevant.
Nice. So I'm on Atomic Habits. One of the members put me on to this one. It's classic. I'm like 20 pages in, and I got 10 pages folded over. Very good book. One of the funny lines is winners and losers have the same goals. Winners have goals to win, and losers have goals to lose, and that's what we see in the market. Where we're the new trader, like I have to lose to learn, and when you say that, that's often what ends up happening. Very easy read though. The last couple books I've been on have been a little bit denser. This has been a little bit of a one you can kind of breeze through. Definitely recommend.
Yeah, no, that one's classic. All right, we wrapped it up. Chart Talk 73. Catch you guys on the flip.